G'day guys, how's it going? So this video is just a follow-up to the Q&A that we ran last Thursday, I think, in which a lot of people were talking about their struggles with risk management, position sizing, the 1% account risk, and just not understanding either what that was or understanding how to arrive at the results so that you're only ever risking 1%. A lot of people were saying that they know the calculators exist, they know how to use the calculators, but they want to know what's actually going on, what the calculator is actually doing. And that's something that I really rate. I'm a big believer in the fundamentals when you're learning any skill. And what I'm going to show you here is the fundamentals of position sizing. So I think it's really important, because if you make a mistake and you put the wrong numbers in the calculator, which is easy to do, which is very easy to do, if you don't actually know what's going on and you just trust the calculator, then you probably won't realize you've made that mistake. Whereas if you actually understand the fundamentals, your brain is more likely to jog and go, hang on, that's probably about 10 times the size of what my position size should be. I must have missed a zero or slipped up somewhere. So what I'll do is I'm going to run you guys through the actual maths of how the calculators work. Now, anyone who doesn't like maths, don't get intimidated. There is a little bit of algebra, right? But algebra is a very dirty word for a lot of people, and it doesn't need to be. You would have been doing algebra in grade 2 when your teacher said, 3 plus an empty box equals 5. What's the box? And you figured out it was 2. That's really all algebra is. We throw letters in there to essentially stand in for numbers, and then we solve it for those letters. So please don't get intimidated. I really think that this will help show you guys how it works. I'm going to take you through the maths really slowly, step by step, so it shouldn't be too confusing. If it is, please let me know. I love making these videos, but at the end of the day, I'm making them for you. So any feedback, where I could be more clear, other ideas for videos, questions that come up as I'm going through this, please let me know. I can't promise to do all of them, but I do love doing them, so I probably will get around to most. So what I'll do is I will share my screen. We'll come over here. And this one especially I love because it's very close to my heart. I'm a big time maths nerd. So, to get the chance to show off some of my math skills, I will not say no. So what we're looking at is my Ethereum chart. This is a trade that I took. I think I've been in it for, I don't know, maybe 2 weeks. I'm not showing you guys how to trade, but I'll just give you a quick rundown. Basically, on the weeklies, we've been in a downtrend for ages. We'd held at this level for a while, and then we broke it, formed a higher high. We were coming back down to it in a descending wedge. I think the CCI was showing bullish divergence on the dailies. And so I really liked the look of a bounce from here. Now, as I've said a few times, I'm a reversal trader, so I'm often, this is the daily's technically in a downtrend here. But I believe that if it was going to bounce anywhere, it was going to bounce here. We had that weekly EQ. We had a demand zone on the weekly formed here. Now I'm on the dailies at the moment, but we had a demand zone on the weeklies formed here, 61.8 of the entire push up. So for me, this was a point I really believe would hold. And so I decided to take some entries. Now I laddered in, but I won't show you guys laddering because it'll just it'll make the math a bit more confusing. So I'll just show you guys on one entry. I will maybe do a follow-up video on laddering if you want it, but it's just the same principles, but then sort of expanded a little bit. So now I'm going to say this about 10 times, about 10 different things, but the most important or the first step, I'll use either of those probably. The most important thing in risk management is where your stop loss is, right? So you might use EMAs, you might use trend lines, you might use fibs, you might use zones, you might use support and resistance, you might use previous structure, you might use a set percentage. You will use what you will use for your stop loss. Now here, I really trusted this zone to hold, and if it didn't hold, I wanted to be out. So my stop loss was nice and tight on the zone, so about 5.36%. Now we've got our stop loss, we don't care about our take profit. Ideally your risk to reward will be higher rather than lower, but that's not what this video is about. This video is about position sizing, and your targets don't affect your position sizing. Your position sizing is purely based on your stop loss and your entry. So what we'll do is we will come down here and we'll start doing some maths. So, well, you know, another one of those golden rules, those most important, or, you know, the 10 most important things that I'm all going to say are the most important rules in risk management is the 1% account risk. Now, that doesn't mean 1% of your account as your position size per trade. That's actually what this math is going to show you. It just means that if your stop loss gets hit, you only lose 1% of your account. So what we have to do is make this so that our stop loss, which is 5.36%, we can't change that. That's where it's got to be. Our stop loss percentage times our position sizing, which is the amount that we actually put on the trade, equals 1% of our account sort of total size. So in English, or in writing, actually, our 5.36% stop loss, which I'll call SL, just to simplify things, times by our position size, which I will call PS, must equal 1% times our account total. Now I'll call that AT. All right, so hopefully that makes sense to you guys. That just means that if our stop loss gets hit, we lose 5.36% of whatever we put on our position size, and we want to make sure that that means that we're only losing 1% of our account total. So that is the equation. That's the key to all this. Now what I'll do is I'll rewrite that just a little bit simpler. So the 5.36%. Now you can also write percentages as decimal figures, right? And that's what I'll do here, because that's what I'll actually chuck in the calculator. So 5.36% is equal to 0.0536. All you do to move the decimal place, all you do to convert them to decimal is essentially divide by 100. So you move the decimal place 2 points to the left, right? We had 5.36, 5.36. Now we have 1, 2. All right, so that is our stop loss times our position size must equal, so the same thing for 1%, right? So we can make 1%, that will be 0.01 times our account total. Now, here's where the algebra comes in, because what we want to do is we want to get our position size by itself. That's what we're trying to calculate, right? Because your stop loss, you ripped off your chart, that's easy. Your account total, you'll rip off your account, you'll look at what your account is. That's easy. The 1% is set. You might use 2 or 3%, but for the sake of this, we're going to use 1%. So those things don't change. So all that changes per trade, I mean, your stop loss will change per trade, and hopefully your account size is going up per trade. But those things are sort of what we would call, geez, I've forgotten the word for it, independent variables, right? Whereas your position size depends on those things. So what we want to do is get position size by itself. And to do that, we have to get rid of this 0.0536. Now, all we do to do that is we divide both sides by 0.0536. Now, if you think of, you know, if I said to you, 2 times C equals 6, there's a very good chance that you know that C equals 3. Now, you might get there by going 2 times 1 is 2, 2 times 2 is 4, 2 times 3 is 6. So you go, well, C must be 3. Or you might get there by going, well, 6 divided by 3 equals 2. So C has to be 2. To get rid of a multiplication in algebra, all you do is divide both sides by it, right? Now, if you're not following that, don't stress too much. I shouldn't say just trust me. Hopefully you are following that. Otherwise, I can do another video at some point. So we still have that, but now we have to divide that whole thing. We'll put some brackets there. They don't actually matter, because when you're working with only multiplication and division, you can do it in any order and it comes out the same. But for the sake of keeping things clear, we'll put the brackets there, 0.0536. Also, I'm probably going to ramble a lot as I do this, just because I do love my maths. So if you're not following what I'm saying, just follow the writing, and hopefully that'll be a lot clearer, because I don't ramble when I type. So We come to the calculator and we go 0.01, whoops, divided by 0.0536, which gives us 0. All right, so our position size must equal the number we just got from the calculator, right? Because I can just divide 0.01 by that 0.536 because they're both acting on the account total. Now what we'll do is we'll round that up to 19, just for simplicity's sake. 19 times our account total, which means our position size must equal 19% of our account total. All right. So that is essentially the formula that is in all of the all the risk calculators. And you are basically just plugging in your stop loss, the percentage that you want to risk, and the account total, and it's spitting back a position size for you. Now, what we'll do is we'll check to make sure that math checks out, right? So we will substitute in an account total value, and then we can check to make sure that the 1% of our account total, if we risk 19% of our entire account, we can check that the 1% is what we'll actually lose if the stop gets hit. That was a bit of a wordy sentence, but let's just work through it. So we have our formula. Actually, so hang on, let's start with our account total. We'll use $1,000. Nice round number because it makes maths easy. $1,000. So 1%, because this is what we want to risk, times our account total should equal $10. 1% of $1,000 is $10. So that's all we want to lose if our stop gets hit, is that $10. Now to check that we have the right equation over here, our position size is 19%. So PS is equal to 19% of our account total, right? Now our account total is $1,000. So our position size is equal to 19% times $1,000, sorry, which is $190. So our position size is now $190. And so all we have to do to make sure that our maths is correct is we see if our 5.36% stop loss gets hit, we should only lose the $10 that we're willing to risk. So 5.36% times 190 is equal to, now remember what I said before, so 5.36% is the same as 0.0536 times that by 190. And beautiful. So now it is slightly over 10.184, but that is because over here we simplified those decimals. We round up to 0.19 or 19%. So that's why it's not exactly $10. If we'd kept all the decimal places, I'm sure it would have been exactly 10. That $1.84 is not going to break the bank. So there you go. That is at the end of, that is the maths that is being used in all the calculators. That is how you calculate your position size. Now I'll do a follow-up video on leverage. It doesn't get much more complicated, but I'll do that in a separate video just to try and keep this one not too long. Now I did plan on doing risk management as a basically my own lesson, a 1 hour, or I didn't know how long it was going to be, but probably a substantial lesson. And then I realized that I was probably better off doing it this way because one, more people will watch it. A lot of people won't make the time for an hour video, and that's completely fair. So one, more people will watch it. Two, it lets me sort of correct course as I'm going. So I could have done that 1 hour video and completely missed the boat on what you guys actually wanted. Whereas this way, I can get feedback and say, oh, that's not actually what I was asking. I actually wanted to see this, or yeah, that's exactly it. Can you just explain what would happen if this and that? So this is probably going to be the first part in the series. So yeah, like I said before, do let me know where I could be clearer, what I can add, what other things I can do for you guys. Yeah, I'll follow this up with a leverage video sometime this week. Hope that helped you guys, and hope you're having a good night.